Hello, everyone. My name is Shweta Lawande. I'm a lead advisor here at Francis Financial, and I'm so delighted to be here with you today. In this video, I'll be sharing market trends that have an impact on your portfolio, and our aim with these insights is to keep you well informed and serve as a concise overview of the key developments that took place during the month. Please, if you have any questions regarding the topics that I'm going to cover today, don't hesitate to reach out to myself or anyone else on the Francis Financial team. So without further ado, let's jump right in. So in the month of May, US stocks displayed very strong performance. The S&P 500 showed a year-to-date increase of 9.7%. In particular, growth stocks outperformed value stocks by a significant margin during the month. The difference between those two was nearly 8.5%. This surge was primarily driven by the excitement around artificial intelligence and its impact on major tech companies like Microsoft and Nvidia. After a challenging 2022, growth stocks have rebounded and are now up over 20% year to date, which is fantastic news. Still, there were areas of the market that have slowed down or faced challenges. International stocks, for example, underperformed, resulting in a smaller gain compared to the US stocks for the first time this year. Meanwhile, small cap companies in the US continued to struggle as investors grew increasingly concerned about the potential impact of an economic slowdown and what that would mean for these smaller companies. Lastly, bonds faced some difficulties as inflation remained persistently high, and investors expressed fears over interest rate increases by the Federal Reserve. What's important to note here is that these ups and downs are expected and, in fact, are anticipated within the market. With a well-diversified portfolio like the one that you have with Francis Financial, you've achieved a remarkable year-to-date growth of over 5% through the end of May. So despite the movements that we're seeing, we're starting off the year on a very, very strong foot. As we near the end of the second quarter and enter the third quarter of the year, one performance indicator that we will be monitoring closely is the overall balance of the companies that are contributing to the growth of the S&P 500. Here on this chart, you can see the top 20 stocks, which represent 30% of the S&P 500 index. These market giants like Apple, Microsoft, and Nvidia have contributed nearly all of the return in the S&P 500 for this year. These big growth names have been supported by strong balance sheets, sizable cash positions, and as I mentioned before, excitement around AI and what that could mean for these companies. The What we have to look at, or the area for concern here, is with the remaining 480 stocks, the remaining 70% of the index that are not doing nearly as well. We're monitoring this trend closely because, as I'm sure we can all agree, a sustained market rally requires broader participation from the companies in the index. And in these upcoming videos, we will be sure to keep you abreast of any changes in this trend that we're seeing. Overall, we're seeing a relatively strong earnings season with results exceeding expectations. As has been the case for quite some time now, the persistence of inflation and continued strong employment numbers have investors expecting further increases from the Fed. And if the Fed needs to keep rates higher for longer, as we've discussed over the past several months, this could lead to a more severe recession. However, despite all of these concerns, markets have continued to be strong, which is a great reminder to us all that it's time in the market and not timing the market that helps you achieve your long-term financial success. I hope you found this update to be helpful, and we'll be sure to see you again next month. Again, if you have any questions at all, please do not hesitate to reach out to myself or anyone else on the Francis Financial team. Thank you so much.